Hello, good morning. How are you all doing today? So let's confirm that we are good to go here this morning. So if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section so that we can get the session started. So I need some confirmation, please. So if you can see my screen and you can hear my voice clearly, type in hi in the comment section so that we can kick the session started. All right, what do we have here in the comment section? Okay, we have VV96, good morning to you. Gustin, good morning. Amir Razin, good morning to you. Thank you very much. 4101, good morning. Hey Carrie, good morning to you. Glad to have you around. Thank you very much for the confirmation. Kiko man, okay, thank you. I'm really grateful for these confirmations. So at this point, I want to assume that we are on the same page here. And let's kickstart the session. I'm excited to welcome you to another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and as usual, we shall be evaluating the financial market in the next 1 hour, where we shall be using technical parameters to identify trading opportunities lining up for us today. As usual, during the live session, we always go through all the pairs we have been monitoring since the beginning of the week. So we are going to be looking at how well those pairs are doing, after which we are going to be making a decision for today. And I would advise that you stay tuned in so that you don't miss out on any of the advices or ideas we shall be dishing out during the live session today. So with that being said, let's dive into the charts and let's see what's going on in the market. However, it's important I state here that looking at the economic calendar this morning, we really don't have any major or high impact macroeconomic events that will be affecting any of the pairs we have been monitoring since the beginning of the week. And since yesterday, price has been a little bit choppy, despite the fact prior to the first Chairman Powell speech, and even afterward it has been a little bit choppy, but the dollar has been gaining some little momentum in the last 48 hours, though we're still very skeptical about this, as participants in this market are still anticipating a macroeconomic event which is coming up tomorrow in the form of the consumer price index. And I think at this point investors are being on the standby waiting for data that will be bringing some liquidity into the market. So with that being said, we shall be diving into the chart right now. So let's look at the market from a technical standpoint, using structures to identify trading opportunities for this week, for today rather. So the first commodity we are going to be looking at this morning is the US oil as usual. And first of all, I would like to do a quick replay of what our expectation was supposed to be like during the New York session yesterday. And from the look of things here, you can tell that the buyers are really finding it tough at this point, though we have been witnessing a couple of breakouts of the $75 level. Remember, at the beginning of the week, we saw the situation here where price started at around the $74.50 level. That was where price started this week. And then we had some couple of rejection of the $75 area by the sellers. And remember, we have this channel since the beginning of last week. Since last week, we have been witnessing this channel. And at the beginning of this week, we said a breakout of the channel is going to be giving us an opportunity to buy, which we bought right here, and it gave us about 180 pips before we saw another sell momentum that came in on later on Monday, We joined that move to the downside after citing selling pressure around the $77 level. We also rode that move all the way down with about how many pips was that? About a minimum of 880 pips if you are taking only one position. But we had another entry here. And then during the live session yesterday, we said we are going to be looking forward to another breakout of the $75 level, considering the fact that that level has been a strong selling niche since last week Wednesday, as you can see here. So this was the channel we identified last week, where we remained patient to wait out for a breakout, or either a breakout or a breakdown of that channel to give us an opportunity to either buy or sell the US oil. And in the last 48 hours now, we have been witnessing a breakout, a consistent breakout of the $75 level, giving us a clue that buyers are trying as much as possible to break out of that $75 level. So during the live session, during the New York session yesterday, we saw price break out of that structure, moving about 800 pips into the $76 level before we started witnessing another sell pressure coming in from that structure. Now again this morning, during the early hours of today, we saw another breakout of that structure, giving us an opportunity to buy, and we bought this one, and currently price is running with over 50 pips in profit at this point in time. Well, in the last 24 hours we've been profitable, though the profit isn't that much. It's not what we expected, as we continue to see selling pressure come in around the $76 level in the last 24 hours. So at this point, for those who are taking advantage of this opportunity here, the next thing we want to be doing right now is to lock in some profit, move our stop loss to lock in some profit here, or you could move it to break even just to protect this current buy position against any sudden pullback that might likely happen at this point. And talking about pullbacks here that can likely happen, one thing I would like to let us know is the fact that since price tested the $77 level this week, we have been witnessing selling pressure from that structure. And then during the New York session yesterday, we saw how price got into the $76 level, and within the it took around 5 hours, 4 or 5 hours, we saw selling pressure come in again from that same level, further emphasizing that there is a tendency that sellers are coming in gradually in this market. However, the fact that we have these higher lows is more or less a sign that buyers are still having a tussle with the sellers. So we really need some breakthrough that will give us a real inclination of where price will be going for today. And if we use the height of price yesterday, that's $76, and the height of price on Monday at $77 level, we can see we have a higher low. And as a result of this, I was able to connect a series of higher lows here, which has given us this bearish trend line. And this is one of the parameters we shall be using to guide trading activities for today. So with a trend line here, we shall be using this to guide any possible bearish momentum that's likely going to be happening from this current structure. And we are not going to be looking for selling opportunities unless the breakdown of this bullish trend line. Remember, since Thursday last week, we have this bullish trend line which has been holding buy pressure. After connecting the series of higher lows here, we have that trend line here. So we have something like a confluence around this area. So price has been caught within this consolidation phase here, giving us a triangle pattern. It's a huge consolidation phase anyway, and we will either wait for a breakout or breakdown of this channel to give us an opportunity to either buy or sell. So how are we going to be using the structure going into the New York session today? Well, if we look at this bearish trend line, we look at this bullish trend line, we want to see price break down the bullish trend line to confirm that selling momentum is likely going to be coming in. And in that regard, this is what we want to be seeing to sell the US oil. We want to see price break down that structure. In fact, if it will break down the $74 level, $74.50 level, remember how this level has been a huge support level for price action since the beginning of this week. So if we have that kind of scenario here, followed by selling pressure below that bullish trend line, then we want to be thinking of selling the US oil. But if this does not happen and price continue to tend to the upside, breaking out of the resistant level of this channel, that is this bearish trend line here, followed by buy pressure right above the structure, we will be looking forward to possible bullish momentum from that point. But for the sake of being careful and conscious here, and considering the fact that sellers have been rejecting the $76 area here since yesterday, we saw another attempt here. I will suggest that we should wait for an outright breakout of the $76 area, with the situation where price action takes out all the sell position here to gain some liquidity for buy momentum at this point. So for those who had missed out on the opportunity at the breakout of the $75 level to buy the US oil, I will suggest that we remain patient and wait out for this breakout of the $76 area to give us that opportunity to buy or add more position to our existing trade. But the breakout of this trend line is something one could risk anyway. But if you are not that type, if you are not that kind of person that knows how to consistently move your stop loss accordingly to protect your position against any sudden pullback here, then I will suggest you hold on for an outright breakout of the $76 area to give us that leverage to add more position to our existing trade here. So we have a simple setup here going into the New York session today. So I hope that we be on standby to catch that move when it happens. So we already have a triangle pattern here where we said we are looking forward to a breakout or a breakdown of this channel to give us an opportunity to either buy or sell. So like I said, we're waiting for a breakout of this channel for buy opportunity and a breakdown of this channel for selling opportunity. And for those who are already in this trade right now, my advice is that you move your stop loss, lock in some profit here. We don't want to lose whatever we have made so far, so let's lock in this profit here. It could be at break even or probably somewhere around this $75.20 level. Move your stop loss around that area just to give room for price action to breed. And before I close this one on the US oil, I would like us to scale hop into the daily time frame, where I want us to see what has been happening here from an holistic point of view, and let us know if with the structure we have identified on the daily time frame, on the 1 hour time frame, still lines up with what we have here on the daily time frame. So right here on the daily time frame, remember at the beginning of the week we were able to identify this bearish trend line after connecting the series of higher lows, and they started in the month of June last year. So throughout the second half of last year, we had noticed that price action has continued to find lower heights. And if we zoom into the structure in the last 3 to 4 months, here you can see that there was a little consolidation phase which lasted about 3 months thereabout, where price action was caught within the channel, where the resistant point of the channel sits at the $93.50 level, and then the demand zone of the channel sits right around the $75 area. And during the first week of December, we saw the breakdown of that structure of the $75 level, a level which has been a strong buying niche for participants in this market since the month of September. It was broken here after a sharp rejection of the $80 level. And last year price closed at around the $80 level, and at this year we saw our price began the year on a bearish note as it broke down the $80 area, pushing down to the downside. And remember, we were lucky enough to take advantage of this bearish move, which gave us about over 1,000 pips with multiple entries there. Now the reason why we were tending towards bullish momentum for this week, one, we had a channel where we said we are looking up for either a breakout of that channel on the 1 hour time frame. And here, when we look at the structure here on the daily time frame, we will notice that the lowest point price has ever gotten to in the last 6 months is the $70 level. And since the beginning of the year, you can see what happened here. As soon as price tested the $73 level here, price has been finding higher highs. We've been seeing bullish momentum, though it's not strong. And one thing about this is that this low here, price action has been unable to break the previous low, hereby giving us a higher low here. And whenever we cite a higher low on the chart, we are looking forward to a possible bullish momentum at this point. And the bearish momentum here that started this year broke down to 75, though since the beginning of the week now we have been seeing multiple rejection of the $75 level, which coincides a possible bearish momentum. That is something that we want to keep in view too as well. And then we also think of breaking out of the $75 level into the $80 level also as a possibility that we are looking forward to. So like I told you on the 1 hour time frame, we continue to look forward to trading opportunity using the technical structures we identified on the 1 hour time frame. So back to our 1 hour time frame here. So like I said, this is what we have here. We have a channel in the form of a triangle. Price has been consolidating within this channel since the later part of last week. And we have a bearish trend line, we have a bullish trend line, and we're already in a buy position presently. We've moved our stop loss accordingly, lock in some profit. Then we remain patient. If this bullish momentum will continue, then we want to be seeing something like a breakout of the $76 area with buy pressure above the structure to give us an opportunity to add more position to our existing trade. So these are my views here on the US oil. If you have any questions whatsoever, feel free to drop your inquiries in the comment section. I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions before we move on to the next option. All right, so looking through the comment section, it seems there is no questions. So in the absence of no questions, I would assume that we're on the same page. So permit me to move on to the next pair. So the next option we are going to be looking at this morning is the US tech. And as usual, remember at the beginning of the week, we took advantage of a buy opportunity at the breakout of the 11,100 rather. So we had a channel initially at the beginning of the week where we saw our price action was caught within the 11,100 and the 11,050, hereby emphasizing some level of indecision at the beginning of the week. And remember what we said, whenever we have flat channels like this, we will remain patient to wait out for either a breakout of the channel, a breakdown of the channel to sell, or a breakout of the channel to buy. And in this case, we were able to catch this bullish momentum at the breakout of that channel on Monday. And so for the start of the week, we were able to take advantage of this buy opportunity, which gave us about 200 pips as price tested 11,300, and we saw selling pressure bringing price back into our entry zone. And during the live session yesterday, we were around this point during the live session yesterday. Hold on a second, let's find out where we were. Okay, this is where we were during the live session yesterday. We were sitting right around the $11,100 level here. And one thing we said about this during the live session yesterday is that we are going to be using two structures to guide our trading activity. The first one is this trend line, which we identified, and as you can see here, price action has consistently respected this trend line since Friday last week, as you can see here. And since the breakout of the trend line on Friday, price has continued to remain above that structure. And one thing I stated here yesterday is the fact that as long as price remain above the 11,100, we remain in our buy position. And during the first couple of hours during the New York session, we saw a little a sporadic movement in price action, which took me out of some of my position a couple of times. At a point in time, I entered a buy, I was taken out again, I entered a sell, had the breakdown of this bullish trend, I was taken out as well. But one thing we noticed is that as soon as price climbed back above the $11,100 level here, and in fact it gave us multiple rejection, which lasted about 3 hours, then with good buy position, buy momentum on the lower time frame, and we were able to join this bullish momentum to the upside. So at this point, if you are taking advantage of this move, kudos to you for being on standby to catch this move. And currently price is running with about how many pips from this position? About 130 pips, which is not bad. The second profit for this week anyways. So what we want to be doing right now is to lock in some profit. We want to move our stop loss accordingly, lock in some profit, and let's prepare to trade for today. So the most appropriate place to lock in some profit here, I will be suggesting that we place our take profit, our stop loss at around the $11,150 level, somewhere around here, 11,150. Let's lock in some profit at this point, and let's see how price action reacts to the current structure here at the $11,200 level. Now, during the early hours of today, we saw multiple selling pressure around the 11,200. Price action respects that bullish trend line one more time, and it was a very good opportunity to buy the US tech if price action breaks out and retests the 11,200, and we already saw a breakout of the structure. So if you are taking this, kudos to you for being on standby to catch this move. But if you are not, well, let's remain patient here and see if price action, if the market is going to be giving us a second chance to join that rally to the upside. So if at any point in time during the New York session today we see price drop back into this bullish trend line, the trend line which also shares a confluence with the $11,200 level here, then we want to be looking out for what's it called, looking out for buying opportunities. We want to be seeing buy pressure here on our lower time frame. Then we want to be joining that rally to the upside. Then if price continues further to the upside here, breaking out of the $11,300 level here, remember we have this structure at the beginning of the week that held sell pressure. As soon as price tested $11,300, we saw selling pressure come in from that structure. So if price action gets into this level here, what we want to be doing is to move our stop loss. We can move it to somewhere around 11,250, lock in some profit, and wait out and see how price action will react to the 11,300. So what do we want to be looking out for when price action gets to the 11,300? Very simple. So as soon as price gets into the 11,300, what we are going to be looking forward to is one, if we start seeing rejection of the 11,300 with selling pressure on our lower time frame, and probably price action transitions into a reversal pattern, it could be a double top structure, any reversal pattern it is, and we start seeing that selling pressure continue, breakout of structure, then we might get it ready to join that decline to the downside. And if a further breakdown of that bullish trend line happens, remember this bullish trend line has been holding bullish momentum since last week. So if a further breakdown of that bullish trend line happens, then this will also confirm that that bullish trend line is no longer strong enough to hold sell buy pressure. Then selling pressure below that trend line will further give us an opportunity to add more position to our existing trade. So that is one view we are going to be looking forward to as soon as price gets into the 11,300. Another thing we are going to be looking out for around this area, if instead of rejecting that level, price action breaks out of the 11,300, and if that happens, we scale down to our lower time frame. That's a very good signal that that level is no longer strong enough to resist buy pressure. So buy pressure right around this level will give us an opportunity to add more position to our existing trade. So this is what we are going to be looking forward to if price action continues to the upside from the $11,200 area. So we remain comfortable in our buy position as long as price remain above the $11,200 level based on this current structure. Now, what happens if price breaks down the 11,200? This is another possibility that we need to take into consideration too as we prepare ourselves for the New York session. So what if price breaks down the 11,200? Now, remember how we said 11,200 also shares a confluence with that bullish trend line that you can see here, that line that has been holding buy pressure since last week. So if a breakdown of that structure happens here during the New York session, then that's likely going to be a signal that sellers are coming in once again. And if that's going to be the case, then we have a new lower high. Remember, this is the last high we had that was on Monday. Then if price breaks down, then this is going to turn out to be the next high, and that's a lower high. And whenever we have a lower high like this, there is a tendency that sellers are coming in gradually in the market. So if a breakdown of the bullish trend line and the 11,200 happens, we are going to be looking out for selling pressure below the structure on our lower time frame to join that decline to the downside, as that bullish trend line is no longer strong enough to hold buy pressure. So that is what we are going to be looking forward to on the US tech. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. All right. Now, moving on, if you have questions, feel free to drop it in the comment section. I will be checking the comment section from time to time. So moving on, the next pair we are going to be looking at this morning is the USDJPY. And on the USDJPY, we have quite an interesting position right here on the USDJPY. And if you remember at the beginning of the week, we identified this channel between the 132.250 level. You can see we had a resistant level here at the 132.250, and then we have the support level of the channel sitting at around the 131.500. And remember, whenever we have a channel like this, what we look out for is a signal in the form of either a breakdown of the channel to give us a signal that selling momentum is coming in, or a breakout of the channel at the 132.250 to give us a signal that buy pressure is coming in at this point. And what we have been witnessing since the beginning of the week is a breakout of the 132.250. In fact, we have a couple of breakouts of the 132.250, giving us a clue into the attempt by the buyers to take over this market. We saw the first breakout here on Monday. We saw the breakout retest here on Monday. We saw another little breakout of that structure around this area, and we saw another one here during the early hours of today, which has triggered a buy position currently that we are in right now. And as price action has continued to trade, hold on a second please, I'm trying. All right, sorry for the break in transmission, as I had a technical issue I needed to sort out. Sorry. So we are back. So we had the breakout of the 132.250 here, which was broken during the early hours of today, which has triggered our buy stop around this level, and price action has continued to trade above that structure. So what I'll be advising us to do here, if you are taking advantage of this opportunity, you will currently be running with about 25 pips in profit. So kindly move your stop loss to break even to protect your position against any sudden pullback that might likely take you out of this current position. So I will advise you to move your stop loss back into the entry zone here, or a little pips above, like 2-3 pips above your entry point, and let's wait out and see how far this bullish momentum will go. Now we have another structure here at the 132.580, which had selling pressure at one point during the early hours of today and appears to have been broken here. A couple of hours ago we saw the breakout of that structure, which was followed immediately by this bearish candle. So what we are going to be doing here is to buy, had another position, had the breakout of this 132.580. So we already saw a breakout right now, so it's appropriate that we place a buy stop above the structure, looking out for another wave of bullish momentum above this level. And in addition to this 132.580, which shall be a parameter we shall be using to guide our trading activity for today, is this bullish trend line I was able to identify here. And this trend line has been holding buy pressure in the last 48 hours, as you can see, after connecting the series of higher lows here. This is what we were able to identify here, and as you can see here, we already having buy pressure coming in at that level. So as long as we remain above both this bullish trend line and the 132.580 here, we should remain comfortable in the buy position we are already in. So like I said, for those who are taking advantage of the move at the breakout of the 132.250, we move our stop loss accordingly, lock in some profit here, and let's see how far this move is going to go. But before I close this on the USDJPY, I would like us to look at the daily time frame, and let's see what is really happening from an holistic point of view. And for the sake of those who are not part of the live session on Monday and Tuesday, this is a good opportunity for you to see how we got to this point we are in right now. Now, scaling up to the daily time frame, this is what we were able to identify at the beginning of the week. So for the sake of this session, we shall be zooming right into the current structure here, which I said will be our guide for trading activities for this year, and that is the 131.00 level. And if you look at the structure here, the 131.00 level has been a major determinant of price action in the last 6 months. You can see what happened here in the month of May. This level was holding selling pressure, and then in the month of June, the first week of June, we saw our price action broke out of that structure to signal a bullish momentum. And since price broke out of the structure in the month of June, you can see here price has continued to trade above the 131.00 level, as all attempt by the sellers to break down the structure has been met with strong resistance from the buyers. So we saw another resistance from the buyers here. We saw another one here in the month of August. We saw another one here in the month of December last year, and then we saw another one happen at the first week of this year, which we actually took advantage of, and it gave us over close to 800 pips here, as we had multiple entries riding this move all the way into the 135 level. Now, in addition to the 131.00 level is this bearish trend line. You can see here since the month of October, after connecting the series of lower highs here, we have this bearish trend line figured out, and it has been guiding bearish momentum since then. And one thing that happened during the first week of this year, that was last week, we saw that as soon as price got into the area around that bearish trend line, we saw sharp rejection of that level, giving us a clue that sellers are still very visible in this market. As you can see, the candle here on Friday closed in form of a shooting star candle, which has a character of having selling pressure still existing in this market structure that we have here, and it also shares a confluence with that bearish trend line, giving us a clue that there is a tendency that sellers are likely going to be coming in at this point. But if we consider the fact that the 131.00 level has been a strong demand zone in the last 6 months, we will need to take some cursory look at what is really happening around this area, as we wouldn't want to be jumping into any selling momentum when we already have a demand zone sitting around this level, which could shake out all sell possibilities to incite another wave of bullish momentum. So in that regard, I feel comfortable looking for selling opportunities if price action breaks down the 131.00 level with a retest of structure followed by selling pressure under this level. Then we could actually look forward to selling opportunities. However, if price action still remains above the 131.00 level, we will be looking out for buying opportunities. And my hopes for this week is that price might likely break out of this bearish trend line, respecting that bullish trend line that we have here. Remember at the beginning of the year when we were analyzing the USDJPY, remember we had this bullish trend line figured out, and this one here, you can see the dotted line on your screen. And if I zoom into the current structure now, so that you can see what I'm talking about here, that's the trend line there. So you can see how the bearish trend line here and that bullish trend line share a confluence around this point. So what we are going to be looking forward to here is to wait and see if the bearish trend line is going to be broken, climbing above that bullish trend line, then if buy pressure continues there, then we want to be comfortable in our buy position, and we look forward to see how price action will react to the 135 level. So these are my views here for looking out for buying opportunities at this point. But if price action respects this bearish trend line and we continue to see selling pressure below the structure, then we might likely see a situation where sellers might push price to break down the 131.00 level. So at this point, let's scale back down to the lower time frame and let's see what has been happening around here to decide if the buy position we are in will still continue to hold, or we should be looking out for selling opportunities. So now when we scale back down to our 1 hour time frame, let's go back to the 1 hour time frame. This is what we were able to see at the beginning of the week. We saw this beautiful channel here between the 132.250 and the 131.500. So that's the channel we have here. And whenever we have a channel like this, remember we always want to look out for either a breakout of the channel for buy opportunities or breakdown of the channel for selling opportunities. And what you can see here, we saw that since the beginning of the week we have been having multiple breakout of that structure, emphasizing that buyers are likely going to be coming in at this point. So at this point, remember we already have a buy position running, and I've told you to move your stop loss accordingly, lock in some profit there at break-even area, and let's wait out to see if price action will break out of the 132.580. so somewhere right above the structure we should be having a stop order sitting around that level, with the hopes that price will continue to the upside from that level. Now there is a catch to this current structure which I explained yesterday, and that is the 133.400 level here, which has also been a major determinant of price action since the last couple of days of last year. So what I said here is that as soon as price gets into the 133.400 level, we want to move our stop loss to lock in some profit and wait and see how price action will relate to this current structure here to decide if we are going to be adding more position to the buy position we have running, or we are going to be looking out for selling opportunities if we start seeing selling pressure below that structure. So these are the scenarios we shall be looking forward to here. As soon as price gets into the 133.400, we might have one, price rejects that level, transitions into a reversal pattern in the form of probably a double top structure, a head and shoulder pattern, whatever it is, to incite another wave of bearish momentum. And if a breakout of the 133.400 happens, then we want to be looking forward to adding more position right above the 133.400. So at this point, for the buy position we have here, we have a TP target sitting at around the 134.500, and that was the level where our TP target was last week for the buy position we took. And let's see how far price will go. Is it going to get back into the structure? And if it does, we should be having around 230 pips to catch there on our first position. Now, before I close, let me show you how important the 134.500 is and the reason why we are placing our TP target around the zone. If we scale up a little bit to the 4 hours time frame here, look at the 4 hours time frame here, look at what we have. So look, that's the 134.500. So you can see how important that level is. Look at what happened here in the month. The first week of December, we saw how that level was holding buy pressure. We see here. Then we saw buy pressure here again mid-month of December before the final breakdown of that structure happened around this level. And since the breakdown of the 134.500, we saw that price has come back to do a retest of the structure during the later part of last month to give us a confirmation that sellers are very strong at this point. Then the beginning of this year, we took advantage of some bullish momentum where we took our profit here and we saw selling pressure coming here on Friday last week. We saw selling pressure coming again. So that's the reason why we are placing our TP target for the current buy position at this point. So we want to see how price action will react to that level. If it breaks out of that structure, then that will be fine for us to add more position to our existing trade. But if selling pressure comes in around that level, then we will have no choice than to get ready to sell the USDJPY. So that is my view here on the USDJPY. If you have have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section as I move on to the next pair. So I will be taking some time to read through the chat and see if there are any questions whatsoever before as I go on the next pair. Sorry. Okay. All right. Okay, so let's move on to the next pair here. And the next pair we are going to be looking at this morning is the XAUUSD. And in fact, the XAUUSD broke out of structure yesterday, followed our plans, and we currently in profit on this one. So let's quickly do a replay of what our expectation was yesterday. So during the live session yesterday, this is where we were. During the live session yesterday, hold on a second, let's see where we were yesterday. All right. Okay, so this is where we were during the live session yesterday, around the $1,876 level. Now, at the beginning of the week, we identified a channel, and that was this is where price started the week. The week started on a bullish note, as you can see here. Price started at around the 1,865. So that level was the support level for this week. Then price climbed up initially, and as soon as price got into the $1,880 level here, we started witnessing selling pressure around this area. And because of the selling pressure we noticed around this area on Monday, we planned to sell below the 1,876, which we actually did, and price moved about let's see, about 800 pips in our favor before it came back to our entry zone. And since Monday here, we have a situation where price action has been choppy. In fact, it has been caught within a consolidation phase here, further emphasizing the indecision in this market. And one thing we said about the structure during the live session yesterday is that we are going to be using, as long as price continue to trade below the $1,876 level here, we continue to look out for selling opportunities. But if price breaks out of the $1,876 level, we look out for buy opportunities. And in fact, it was quite a difficult situation anyways here, and I was able to identify this demand zone here yesterday to show you how important, but how strong the buyers are at this point. And because of this, we had this bullish trend line figured out yesterday, and we said if price continue to trade above the bullish trend line, we would be looking out for buying opportunities. So we had selling position running as at yesterday, and we were taken out at break even as price action climbed back above the 1,876. And during the early hours of today, we saw our price has broken out of the 1,876, giving us an opportunity to buy the XAUUSD. And if you are taking advantage of that move right from that point, you will currently be running with about 700 pips in profit at this point. Now, I also made mention yesterday that if a further breakout of the $1,880 level happens, we will be looking forward to adding more position to our existing trade, and this is exactly what happened during the UK session this morning. We saw the breakout, retest of the structure, and price has continued to the upside. If you are taking advantage of that 1-2, you will currently be running with about 200 pips in profit at this point. So right now, the next thing we want to be doing, if you are taking advantage of this buy position, is to lock in some profit at this point. And the most appropriate area to move your stop loss right now is somewhere right above the $1,880 level. Let's lock in some position here, and let's see how price action is going to play out going forward, as this could likely turn out to be a false breakout where price might likely drop back again below the 1,880, breaking down that bullish trend line to inside a sell-off on the XAUUSD. So we need to be very, very careful here. So what we are going to be doing is move your stop loss, lock in some profit at this point, and let's wait out and see how far this bullish momentum will go. And if at any point in time price breaks down that 1,880 and we start seeing selling pressure below the structure, then we might be hard to join that decline to the downside. So this is the view we have here on the XAUUSD. But before we close on the XAUUSD, I would like us to scale up to the daily time frame. Let's look at how important the structure is, and let's confirm that we are good in our buy position, or probably getting ready to sell the XAUUSD. So now scaling up to the daily time frame here, this is what we were able to identify at the beginning of the year. So I will just zoom right into the structure where we have the structure that is guiding our trading activity for the year. Remember how important the 1800 level is. It has been a major determinant of price action throughout last year. And what we saw here throughout the month of December was the fact that price was caught within a channel between the 1815 and the 1785, and in fact the 1815 had been holding selling pressure here throughout the month of December, as we saw every attempt by the buyers to break out of the $1815 level here was met with strong resistance from the sellers. However, when the year began, we saw the breakout of the 1815 level, which sends a wave of new hopes for the XAUUSD in the market. And since then, we have been enjoying this bullish momentum to the upside. Remember, we took advantage of this bullish move last week, and price tends to continue to trade to the upside at this point. So things are looking very, very bullish on the XAUUSD right now. And the 1880 level, which we identified on the 1 hour time frame, is sitting somewhere around this level. As you can see here, that's the 1880, and we'll continue to use that level to guide our trading activities going forward. So if price continues to remain above the 1880 here, we want to be comfortable in our buy position. But if at any point in time price action falls below the structure on the structure of the 1880, then selling pressure is likely going to come in, which might likely be a retracement of this impulse leg that we have here. So remember, we had this impulse leg, and from a technical standpoint, at a particular point in time, there is a likelihood that price will do some retracement into probably our golden zone area in anticipation of another wave of bullish momentum. So we might likely see a retracement phase if we start seeing reversal patterns around the 1880 on our lower time frame. So this is what we are looking forward to. So if I go back down to the 1 hour time frame here, so that we can see what I just explained. So this is what we have. That's the 1880 there. So we've already identified that structure here, and I said breakdown of the 1880 followed by selling pressure below the structure has a tendency of giving us selling momentum at this point. So for those who are already in this buy position, move your stop loss accordingly, lock in some profit, and let's wait out and see how far this bullish momentum will go. If you have questions, feel free to drop your inquiries in the comment section. I will be checking from time to time to see if there are any questions whatsoever. So let's dive into the last pair we are going to be looking at for today, and the last pair we are going to be looking at for today is the GBPUSD. And on the GBPUSD, it's during the live session yesterday, we were around the right around the 1.21700, somewhere right above the structure here. And remember, since the beginning of the week, we have been on a bearish momentum, though we had a buy position at the beginning of the week, but was taken out with some small profit as we saw selling pressure resume at the 1.22100 level. And since then, price action has continued to find lower lows and lower heights. As you can see here, as a result of that selling pressure, we were able to identify this bearish trend line that you can see on your screen with a dotted green line. And since then, you can see how price has consistently respected that trend line. And one thing we said during the live session yesterday is that we are going to be using the 1.21700 level to guide selling pressure, as if price this is the 1.21770 level. And remember also, we had this bullish trend line after connecting the series of higher lows here. So what we said during the live session yesterday is that we want to see price action break down that bullish trend line to give us a sign that sellers are coming in at that point. So if a breakdown of that bullish trend line happens, we want to see that as a signal that that line is no longer strong enough to hold buy pressure. So we saw the breakdown. We said a breakdown retest of the trend line should give us an opportunity to join that decline to the downside. And if a retest of the trend line happens, you can see how it shares a confluence with the 1.21700 level, which I said should be guiding our selling opportunity going forward, following the breakdown of that trend line here. And that's exactly what happened. In fact, it was a very sporadic move as price action broke down, rejected that level. And since yesterday's New York session yesterday, we saw our price action has continued to reject the 1.21700 level to emphasize some level of strength of the sellers at this particular point in time. And if you already joined that decline from the 1.21700 level right now, you will currently be in profit of about 35 pips anyways, and it's not bad anyways. So we shall be looking forward to see how far this bearish momentum will go. And one more thing we need to take into consideration here based on the structure is the fact that the 1.21250 level has been holding buy pressure since the beginning of the week. Look at what happened here at the beginning of the week. We saw buy pressure. We saw buy pressure here. Even though we had the breakdown of this bullish trend line, we saw that as soon as price got into the 1.250 level, we saw buy pressure come in, and during the early hours of today too as well, despite this engulfing candle here, we saw another buy pressure coming in around this level to give us a clue that there is a trend of buying pressure around this level. So we need to be very wary of this. So what I'll be advising us to do here is to move our stop loss, lock in some profit somewhere around the entry point here, as we never can tell. This could turn out to be to incite a big, huge move going forward. And one thing about the consolidation phase we are noticing here on most of these major pairs, remember we have a CPI. When we looked at the economic calendar, we have a CPI. Hold on a second. We have the consumer price index coming up tomorrow, and I am of the opinion that major influencers in the market are stepping aside, waiting for this data to decide what the next line of action will be. So at this point, we can see that the consolidation phase in this market is really very strong. It has been existing for the last 48 hours as price action continue to consolidate between the 1.21700 level and the 1.21250 area. So for us to know that the selling momentum here has come to stay, we want to see an outright breakdown of the 1.21250 to give us further confirmation to add more position to the existing trade. If a breakdown of the 1.21250 does not happen, we shouldn't be thinking of adding any more position to the sell position we're already in right now. Now, the next question we want to be asking is the bullish trend, the bullish pressure we have been witnessing from the 1.21250 level, is it strong enough to push price to the upside? And if it's going to be strong enough to push price to the upside, what do we want to see for us to buy the GBPUSD based from this current structure? Before we go into the details into that, let's quickly run through the daily time frame. Let's see what's the 1.21250 is looking like from an holistic point of view. So if we scale up to the daily time frame here and look at what the market structure here is giving us, so you can see what we have here. Though since the beginning of last year, we saw our price action has been on a bearish momentum throughout last year, and as a result of that, we had this bearish trend line after connecting the series of lower heights. And not until the month of November last year, we saw the breakout of that trend line, giving us a sign that the trend line is no longer strong enough to hold selling pressure as price action broke out of that trend line to the upside. And since then, price has continued to find higher highs, respecting this bullish trend line that we have here. And at the beginning of the year, remember, we identified this level at the 1.200 level, where I said is going to be our yardstick for trading activity for this year. And one thing about the 1.200 level is the fact that it shares a confluence with that bullish trend line that you can see on your screen. And following the price testing that structure, we can see we had bullish momentum. We had an engulfing candle taking us out of that structure on Friday, and there's a tendency that price might likely continue to the upside. And at this point, with the breakout of the 1.200 level, we might likely see a situation where price will drop a little bit back into the structure to test it before another wave of bullish momentum happens. Or we could actually see a breakdown of the 1.200 level to incite another wave of bearish momentum to the downside. So these are the scenarios we are looking at this point. So in order to have a better perspective of what is really going on here, we need to scale down to the lower time frame. Let's see what is really happening here. So there are two things that we could see that could come out from this current structure. One, we could see price do a trend continuation pattern around here. It could be a bullish rectangular pattern, it could be a rising wedge, it could be a flag pattern, whatever it is. Breakout, retest on lower time frame to incite a trend continuation to the upside. That is one scenario we might want to be looking forward to. And then the other possible situation that could happen here is the structure here transpose into a reversal pattern that will incite a retracement probably back into the 1.200 level, or even go as far as breaking down that structure. So this is what we are going to be looking at on the 1 hour time frame. So if we go back to the 1 hour time frame here and look at the current structure that we have, you would notice that since the beginning of the week we have this bearish trend line figured out. So like I said, a breakdown of the 1.21250 should be giving us that opportunity to add more position to our sell trade. And if a further breakdown of the 1.212100 level happen, we want to be adding another position to this trade. So for the buy expectation here, for me to buy here, in fact, I would have preferred that price action breaks out of the 1.22100 level here, a level which has been holding selling pressure since the beginning of the week, to buy this one. But we can also use this trend line as a yardstick for buying opportunity, and that the only way we can use it is to see price do an outright breakout of that structure. And if it does an outright breakout of that structure, we are not going to be buying outrightly. The reason is because of this bearish momentum we have been witnessing since the beginning of the week. So we are going to be looking forward to price coming back right here on the 1 hour time frame to do some retest of structure with significant buy pressure on our lower time frame. Then we could actually join that rally to the upside, and if a further breakout of the 1.22100 level happens, then we might want to be adding more position to our existing trade. But as long as price remain below the 1.21700 level here, or below this trend line, we continue to remain patient and stay in our sell position and think of adding more position at the breakdown retest of the structures I was able to identify around here. That is the 1.21250, the 1.2100 level. So at this point, I would like to call it a day here. If you have any questions, feel free to drop your inquiries in the comment section while I do a recap of all we talked about today. So for the sake of those who are not part of the beginning of the session, well, I'm running through the instruments we talked about today so that you can have a better perspective into what we did for today. So the first commodity we talked about today is the US oil, and on the US oil we're already in a buy position. Remember, we said we are going to be buying as long as price breaks out of the $75 level, which it has done a couple of times this week, and we already have a buy position running, and we've moved our stop loss to somewhere right above the $75 area here to protect our position against any sudden pullback that might likely happen at this point. Then the structures we identified today that we said we shall be using to guide our trading activity is the structure, the bearish trend line here after connecting the series of lower highs. That's the trend line. Then we also have this bullish trend line here. So one thing about this structure is that the bearish trend line will continue to guide selling pressure, and the bullish trend line here will continue to guide buy pressure. So what are we going to be using the structure to guide our trading activity for this week? Well, for those who had missed out on the buy position here at the $75 level that we took advantage of this morning, I have told you to remain patient and let's wait out for a significant breakout of the $76 area, an area which has held sell pressure at one point yesterday. So we want to see an outright breakout price action, taking out all the sell position here to give us a confirmation that the buyers have come to stay at this point. So if buy price breaks out of the $76 level, then we want to be adding more position to our existing trade. And if you are yet to be in this trade, this is a good opportunity to join that potential rally to the upside. And there is a catch to this bullish momentum, this potential bullish momentum. I said as soon as price gets into the $77 level, remember this level has been a selling niche at one point in time. We want to remain patient, move our stop loss to lock in some profit, and wait out to see how price action will react to this current structure. So if price breaks out of that structure, then we want to be glad and ready to add more position to our buy trade. But if selling pressure begins here and price we start seeing rejection of the $77 level by the sellers, then we might be in to join another wave of bearish momentum back into probably this trend line here, which would have been broken if price breaks above the $76 level. And this might likely incite another wave of bullish momentum. That's a possibility we want to be looking at too as well. Then for selling the US oil, we don't want to see anything other than a breakdown of this trend line, or probably the $74.50 level, to sell the US oil. So if this does not happen, please stay clear of selling the US oil. All right. So we look out for buying opportunities above the $75 level, and if a further breakout of the $76 level happens, we look out for opportunities to add more position to our existing trade. So we're selling only when price breaks down the bullish trend line, and the structure will sell below that level. So that is that on the US oil. Then we went on to talk about the US tech. And on the US tech, we are quite profitable on this pair since the beginning of the week. As you remember, we took advantage of the breakout of the 11,100 after the breakout of that channel we identified at the beginning of the week. So we took advantage of this move, which gave us about 200 pips as price action tested the $11,300 level to incite a bearish move that came back to our entry zone, and in fact within the channel where price has started this week. So right now we also had another buy breakout of the 11,100, which we are already in, and currently we are running with about, if you are in from that point, we are currently running with about 120 pips in profit. And I've told you to move your stop loss accordingly to somewhere below the $11,150 level. This is where we are moving our stop loss to lock in some profit as we wait out and see how price action reacts to the $11,200 level here. So that is what we did here, and for today we have two structures to guide our trading activity. We have this bullish trend line, this one here. So if price action continue to trade above that level, we want to feel comfortable in our buy position. And we also have the $11,200 level, which has been a selling niche for like 18 hours now. So a breakout retest of that structure should be giving us an opportunity to add more position. And if a further breakout of the 11,300 level happens, we want to be adding more position to our existing trade. So like I said, this trend line and the $11,200 level is our yardstick for trading activities for today. So if at any point in time during the New York session today price breaks down both the bullish trend line and the $11,200 level here, then at this point we want to be seeing this as a bearish signal, as the bullish trend line is probably not strong enough to hold the bullish momentum any longer. And with selling pressure below the structure in our lower time frame, we want to be joining that decline to the downside. So these are the views we have here on the US tech for today. Then we went on to talk about the USDJPY, where we are already in a buy position currently, as we identified a beautiful channel at the beginning of the week between the 132.250 level and the 131.500 level here. and we saw a breakout of that channel to give us an opportunity to buy, and we have already bought the USDJPY, as currently we're running with about 30 pips in profit at this point. And one thing we said here is that we are going to be moving our stop loss to break even or somewhere right above the 132.250 level. Let's see how price action will play out from this point. And we were also able to identify this 132.580 level here, which has been a selling niche at one point during the early hours of today, and we saw the breakout of that structure here. So we placed a buy stop order right above the 132.580 with the hopes that price will break out of that structure to continue to the upside. And now there is a catch to this bullish momentum that we have here if price continues to the upside, and that area is the 133.400. And one thing I said about this structure is that as soon as price tests the structure here at the 133.400, we want to be moving our stop loss to lock in some profit and wait to see how price action will react to that structure. If it breaks out of that structure, then we continue to look out for opportunities to add more position to our existing trade. But if rejection continue below the structure and selling pressure on our lower time frame happens, then we shall be getting ready to sell at this point. So from this current structure here, we continue to look forward to buy possibility as long as price remains above the 132.250 level. Now, for me to sell the USDJPY, I wouldn't be looking forward to any sell momentum based on the fact that price broke out of the 132.250 and the fact that the 131 level here, which we identified on the daily time frame, has been a strong buying niche for participants in this market. But if the structure is going to project some selling momentum here, we would like to see something like a breakdown of this bullish trend line. This bullish trend line here, which has been holding by pressure since the beginning of the year. As you can see, this bullish trend line has been holding by pressure since the beginning of the year. So we want to see an outright breakdown of that structure, followed by selling pressure below that level, below the 132.250, to give us an opportunity to sell. And if we are selling, the TP target should be sitting around the 131 level. Remember, the 131 level has been a strong buying niche for participants in this market in the last 6-7 months on the USDJPY. Then we went on to talk about the XAUUSD, and on the XAUUSD at the beginning of the week, we were able to identify this channel between the 1,865. This is the support level for the channel. This is where price started this week, and then we had the resistance level here. And during the live session yesterday, we were looking forward to a breakdown retest of the 1,876 to sell, and if a breakout of that structure happens respecting that bullish trend line that we have here, we look out for buying opportunities. And we also made mention of the fact that if a further breakout of the 1,880 happens, we'll add more position to our existing trade, and this is exactly what happened. And on the XAUUSD, currently we are profitable on the XAUUSD, and we have advised that we are going to be moving our stop loss to somewhere below the $1,882 level, or somewhere right around the entry zone here, to lock in some profit, protect our position against any sudden pullback that might likely happen. And one thing about the pullback here is based on the nature of these candles here. As you can see, the wicks are looking like rejections of this zone around this point. So this could turn out to be a false breakout. We never can tell. And if that happens, that price breaks down the 1,880 with selling pressure below the structure, we want to be selling the XAUUSD, and the further breakdown of that bullish trend line should be giving us an opportunity to add more position to our existing trade. So move your stop loss accordingly, locking your profit above the 1,880, and let's see how far this bullish momentum will go. And if a breakdown of the 1,880 happens, then we want to be getting ready to join a decline to the downside. So we moved on to talk about the GBPUSD, which is the last pair we are talking about for today, and we are profitable already on the GBPUSD as we took advantage of the breakdown retest of this bullish trend line here. We saw the breakdown, and in fact we had multiple retests of the 1.21700 level, which gave us that leverage to join that decline to the downside. And for those who are taking advantage of that bearish momentum, you will currently be running with about 40 pips thereabout in profit at this point. And one thing I said here is that we want to be moving our stop loss to somewhere right around the 1.21630 or 650 area, and the reason why we are doing that is simply because of the buy pressure we have been noticing around this area in the last 72 hours. As you can see, every attempt by the sellers to break down the 1.21250 has been met with strong resistance from the buyers. So because of the situation here, we need to be very cautious, as price might likely take us out of the structure, breaking out of this bearish trend line to incite a bullish momentum at this point. So because of this, I've told you to move our stop loss, lock in some profit, and let's wait and see if a further breakdown of the 1.21250 level happens on our lower time frame. We want to be adding more position to our sell trade that we have here, and if further breakdown of the 1.2100 level happens, then we want to continue to add another position to our existing trade. However, if price breaks out of the trend line, I have told you that if price breaks out of the trend line here and probably breaks above the 1.217, we want to be seeing this as a bullish signal. But remember that we are still within a sub-selling niche here. As you can see, we are still within a selling niche, so we need to be very careful. Even though we cite a breakout of both of the structure, we will want to remain patient and see price do some retest. Then we see significant buy pressure on our lower time frame around this area, probably around the 1.21500, a strong psychological level to join a trend continuation to the upside. So if a breakout of the trend line does not happen, we continue to hold on to our sell pressure. So this trend line will continue to guide our trading activities around selling opportunities on the GBP USD for today. So that is that on this one, and we were able to treat about 1, 2, 3, 4, 5, 6 pairs which we have been monitoring since the beginning of the week, and it has been a wonderful moment with you guys around here. I really appreciate every single one of you, and I hope I was able to simulate all the possible scenarios that might likely happen during the New York session today, and we are not going to be caught by any surprises when they finally happen. Remember, you don't get too excited whenever you cite a breakout of a channel or a breakout of a structure, as this is only a signal. Immediately we cite a breakout of structure, we want to scale down to a lower time frame, look out for retest of structure, then get ready to join whatever direction the breakout is giving us. On this note, I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the pairs we have been monitoring since the beginning of the week and get ourselves prepared for the New York session tomorrow. Do have a wonderful evening. Bye bye.